Hey everyone, we just wanted to make a quick announcement before we start the last panel for today. So Shad Marquitz and myself have known each other for about 5 or 6 years, and we've never done an event before together, but we're doing our first webinar in June, June 15th to be specific, and we're going to be covering a number of different topics. And I wanted to just give Shad a few minutes or just a minute to talk about that.
Well, John and I often will compare notes. We both manage our own portfolios. We're often texting each other throughout the week. What about this? What about this? And we thought it'd be fun to do an event together where we're going to share what we do in our own portfolios. What are we buying? What are we selling? What do we like? What are our top positions? Why do we feel that way?
Yeah.
And it's going to be different buckets. It's gold and silver, copper, critical minerals, tungsten, antimony, lithium, whatever, uranium. So we're going to span the gamut, and we're going to share, we're going to pull back the layers and say, this is what we're doing in our own portfolios.
Yeah. And so it's June 15th at 3:30 Pacific, but we also will have a replay available. So if you can't make it live, we'd love to have you, take a look at it. So it's on my website. It's fenecconsulting.com. And then just at the very top, you'll see a tab that says strategies for after the correction. That's what I named it in March. Hopefully the timing is good.
Great title.
So just wanted to mention that to everyone who's an investor in the room, and thanks for the opportunity to mention that.
Hope to see you guys there. Yeah.
Good shot. Come on, guys. Well, we're going to do the last panel of the day. I really appreciate all of you sticking it out to the end. I know back to back can be tough, but that's the business I came from at Merrill Lynch and JP Morgan. There's no breaks. So with us today on the last panel, talking about critical minerals today, is Mike Rowley, CEO of Stillwater, which is PGEZF in the States and PGE in Canada. And on the far end, right next to me is Duncan Roy, who is Senior Executive with Polymetallic, and that is PNPNF in the States and PNPN in Canada. In full disclosure, we own both of these stocks. I was asked earlier by Paul about nickel and about PGMs, and I mentioned both of these names because we've owned them for quite some time. And I thought it'd be useful to have their perspective on where they see not only where their companies are going, but where are these metals going that they are mining, right? I mean, because you do different things, but you're both in Canada. You're in Canada. You have some Canadian projects, but that's not your focus. Your focus is Montana and the U.S. So why don't we start with just a 2-minute overview of each of your companies for everyone? Duncan, you want to start?
Sure. Thanks everyone for being here today. So Polymetallic, our primary focus is Quebec. We have a project called NISC. It is a incredibly unusual and rare discovery that we have. It's labeled as a orthomagmatic. We have a whole bunch of different minerals on the go. We started off with nickel. We made a discovery that is incredibly rich in copper, platinum, palladium, gold, silver. We've got cobalt and rhodium in there as well. Incredible grades, incredible metallurgy, and it's very exciting stuff that we've got on the go.
Excellent, thank you. Mike?
Yeah, thank you. Good to see everyone. We have half the Stillwater complex, and that's very significant as we talk about American supply for critical minerals. This is a district that's been producing critical minerals in the U.S. for over 100 years. Our ground actually produced copper, nickel. Of course, chromium is still something the district is synonymous for. It's still America's best chromium reserves. We have a chromium resource, 2.3 billion pounds. We're known more for our nickel, copper, cobalt, and also our PGMs. And it's worth noting that we're right beside Sibanye that is currently actively producing PGMs, palladium, platinum, lesser amounts of rhodium, other things, copper and nickel actually. Right there in Columbus, Montana. They are the sole primary source of PGMs in the U.S. The broader district is now synonymous with that. We're very happy to be bringing South African mine models to that. Very big thinking taken from Ivanhoe's Platreef project in particular. You can look at the economics of that to get an idea of why we're of interest to our congressmen and senators in this productive American district. We've attracted top talent from Ivanhoe. The last point is we have Glencore as a 13% shareholder, and that speaks volumes that they would write 3 checks to us in 3 years.
Thanks, Mike. So a couple of symbols for you there. Sibanye is how I found Stillwater, because I was a big Sibanye shareholder. That one is SBSW. It's a major stock. They don't only have operations in the U.S. but overseas as well. And then Mike mentioned Ivanhoe, which is Robert Friedland's play. That one is IVPAF. Looks pretty attractive down here. Really sold off this year. And Robert Friedland's a billionaire and knows exactly what he's doing at all times. They have some tremendous projects. So to see a deposit like that in the U.S. is pretty rare, right? I mean, this doesn't happen all the time, and that's what got me really interested in your project.
And the fact that I answered the phone.
You did, which is unusual sometimes in mining. Thank you for that. I wanted to talk a little bit about how much each of you have in cash reserves right now, and what kind of drilling do you have planned over the next 12 months?
Oh, far away. As of our last posted quarter, $21 million in the till. It's enough to finish our planned budgeted drilling program for the year. When we raised our last funds last February, it was $50 million, 40 was charitable flow-through. We did about 35,000 meters last year. We'll do 65 this year, 6 rigs on the go. And if we can, we're hoping to add more rigs in the next little while.
Impressive. Mike?
Thanks. Like Polymetallic, we're fully cashed up. 19 million in the till as of last financials. And we're looking at our biggest programs ever, actually, this summer. We're booking rigs and helis. That's actually largely done now. It'll be a 3-rig campaign, more if we can do it. That's a major catalyst coming. Before that, a resource update is a matter of weeks away now, and we also have news pending too on those rhodium drill results we've been talking about.
So I set that softball up to set up the next part of my discussion here, which is you guys are both cashed up and you're both drilling a ton, which is really great timing because nickel has bottomed. Platinum and palladium, in my opinion, bottomed last year. If you look at the ETF trackers for that, to just take a look, it's PALL for palladium and PPLT for platinum. You can clearly see in the chart they bottomed last year. They have been under, all three of those metals have been under tremendous pressure. Why? Because of the Russian conflict, which started in February of 2022. So if you look at the chart of those three metals in the beginning of 2022, we saw an immediate pop in trading in all three metals because people were like, oh, okay, this, Russia's a huge player in these metals and this is going to cause a huge supply, demand disruption. What they didn't figure out was how long this war was going to last, and that Russia was going to be selling these metals to the Chinese and others to fund the war effort, which crushed all three metals in terms of price. So the fact that these guys are cashing up now to drill is huge. We talked about this earlier, right, with Paul and myself. We talked about timing. It's not always that you have a bad project or that you have a bad leadership. It's the timing. If you get that piece wrong and you have all of the things going for you, you could go bankrupt in junior mining. It's fact. So I really, we got heavily invested in both of these companies in November and December of last year. One was tax loss season. I called, Duncan's co-worker Terry, and I said, what's going on? How is this thing getting sold off so much? And he said, there's just some big seller out there who didn't really, work with us and trying to find a buyer. And like this stuff happens, and so making those phone calls that Don and I do on literally on a daily basis really matter, because then I can disseminate that information to people. In fact, we had Terry on a podcast in November or December, I think 62 cents US. And I was like, this is like a screaming buy. We were 2 cents off the low or something.
Yeah. And Terry listened to you, actually. He bought some for himself as well. Nice. So did I, actually. It was perfect timing.
Yeah, so I mean, I look at a computer screen all day. I have no social life. So basically, I'm working 70 hours a week looking at a computer, and I see these trends, especially it does like present itself during tax loss season, almost like clockwork, So there's times as an investor that, timing matters, right? Where you can really make a lot of money. And I think one of those times is right now. So I just wanted to point that out, that the war is temporary, that the war in Russia is going to end sometime in months, not years, like these things are going to, when Russia and Ukraine put it to rest, I think nickel, platinum, palladium take off. I mean, I really do. And that's why we're positioned in stocks like this. So my next question is, you're in Canada, Duncan, and you're in the US. Like, Can you talk about the jurisdictions and the positives and the negatives of like what you've experienced in Quebec and versus Montana?
Yeah, like so we're actually in a bunch of other countries as well. We're in Chile and we're in British Columbia, which is its own country, and
as of this morning, Saudi
and
Arabia.
we're in Saudi Arabia. We just made some very interesting news announcement on that front. But our feeling is Quebec's probably the best place to be in terms of jurisdiction, and the environment that we're in is just absolutely first rate. So you can look at this from a bunch of different levels. At the top level, the Quebec government has been very positive and helpful for us in moving our project ahead. The Indigenous group that's there is the James Bay Cree. They are the most sophisticated Indigenous guys going. They're pro-mining. There's 4 mines within 100 miles. They've been incredibly influential in making things happen for us. At one point, it was very critical for us to get some property that was right beside our major hits. It was controlled by Quebec Hydro, and they had basically a ban on a whole bunch of different areas dating back to the 60s when they thought they might be utilizing these areas. If we went as an Ontario company and said, can we please get your restrictions lifted, we'd still be waiting for another decade. James Bay Cree interrupt, we get the stuff almost for free, and it's critical to our company. So lots of help from the Quebec government, also the feds involved too. It's going to probably cost about $400 million to put this project into fruition. We'll get tax credits from all these guys that cover more than half the cost, and we can do the banking for the rest. So our capital stack issue is absolutely minimal. Infrastructure is fantastic for us as well. We're right beside a major highway. We've got a Quebec Hydro substation across the street, hydro lines that go across our property. There's so much juice coming out of here there that you could light a cigarette underneath them without a match. And regional airport, James Bay Cree headquarters, all that stuff is just great. The last thing I would sort of mention is the classic horrible aspect of mining, and that's permitting. And what we found in the last while is a really big ramp up in efficiencies in getting permits processed, happening pretty quick. And as we look at doing feasibility and putting this thing into production, our thoughts are maybe we're looking at a 1-year process. You don't really advertise that much, but that's what it looks like, versus the traditional 2+. So pretty exciting environment for us. That's Quebec.
Yeah, bringing it to Montana, like Quebec in Canada, it matters very much where you are in, actually, frankly, both countries, in North America in general. You can be in the wrong place and face a long opposition, or you can be in a pro-mining area, as Polymetallic, Stillwater both are. We, of course, have Sibanye producing right beside us, so right away there's infrastructure. They're actually mining half a kilometer from us underground. If you look at our figures, it's kind of a no-brainer. They have no corporate connection to us. I can't claim that there will be one. We're friendly neighbors. We brought Glencore in, which is cheeky, but I have talked with both parties about this. We're in a good place, and to have what we have in the U.S. I will flag also Sibanye's Good Neighbor Agreement, which is a really good template for how to work in a community. And it's made our life very easy as I meet with county commissioners, the governor, all 4 federal representatives, both congressmen, both senators. They're all supportive of this project, and it reflects on that mining history in the district and also Sibanye's good name.
Excellent. So when you look at the, share structure of each of your companies, you have Glencore as a 13% holder. What does the rest of that share structure look like briefly, if we could focus on that in terms of how the pizza pie on your website looks?
Sure.
And do you have maybe 25 or 30% of that in good hands in total, so
Absolutely.
you can prevent a take under, if you will?
Yeah, and I would encourage everyone in this room to look at quality of shareholders as your first metric. Know where you are in the cycle. If you're early stage, that's fine. There's lots of risk. maybe you haven't attracted major names. You have big names in your one, or Glencore yet, but you're getting there. We're resource stage. We have Glencore in. I myself have 6.4 million shares. I wish I had more. My chair, who's elsewhere right now in a meeting here in DC, also has 6 million. We compete very nicely on that. Broadly, management, I think, is 17% in that last pie chart. US Global is there. Sprott Asset, not Eric Sprott himself, but Sprott Asset. Some big European funds. It makes a big difference to have quality names in there, and you track them as you grow and move down that Lassonde curve would be the point. Yeah.
What is so when you added it up, so it's Glencore at 13, management at 17. What is, when you look at the funds like Sprott or US, what is the total? Do you know?
That I don't actually know a number for that. Probably 20% or something total institutional, and those names. But broadly, people close to us, and back to your point about a well-run junior, you're always preparing for a hostile takeover. Let's just say it. You want that 40% or something in friendly hands.
Right.
And that's what we have. We've prepared for that. Yeah.
Yeah, it's so true.
That's very true.
You got to cover your ass.
You got to.
So we're sort of in a similar boat, a little different color to it all, but roughly half the company is controlled by our sort of top 6 or 7 shareholders. Terry, our CEO, has about 18 or 19% of the company himself with his family. You throw in a couple more percentage points for the rest of management directors. Some of the top funds in Quebec are on board, but the thing that we typically point out is we've got 15 billionaires on our books, and 3 of them are people that everyone in this room would know. You know, Robert Friedland, Rob McEwen, and Gina Reinhardt. I think in the last 2 weeks we picked up another 2 billionaires in New York as well. So things are progressing there, and we're actively working on more. One of the things that we've done, which is perhaps somewhat common for the juniors out there, is we've had useless participation by brokerage firms and banks, and so we've done almost all the work ourselves, and that's been key. We sought key influencers like this character here, and it worked out very successfully, and just gone out and told our story and made sure that we weren't full of shit, and that we try to deliver on time for the things that we said. So those are key aspects to our share structure.
Under promise, over deliver.
Absolutely, yeah.
Thanks, guys. Yeah, just to piggyback on that, I mean, I brought it up for a reason, because if you go back and do your due diligence as an investor, you might look at the website and see a few 100 million shares at each company and say, John likes tight share structures. Why would he invest in these companies? Well, it's because of what was just said. If you do the math on the share structure, the number of shares or warrants or options doesn't always tell the whole story. Because when you look at what you just heard, I mean, let's say half, conservatively 50% of all shares are in good hands. These stocks are not going to get taken under like Marathon did a few years ago, or some of the other names that we could go through a list on. It's like, Don Durrett and I are not interested in 20 to 30% takeovers. We are looking for big alpha, and this is the kind of stuff. I mean, when I introduced Stillwater and Terry with Don, he was like, man, you keep bringing me these stocks that I don't follow because I'm mostly focused on gold and silver, but these guys have he looks at gold equivalent, right? And it's like incredible when you do the math, because these are both what we call polymetallic companies. So if you don't know what that means as an investor, check it out or just talk to me about it. It's like you have so many ways to win in a polymetallic deposit. And when I met Terry through Eric Sprott like 3 years ago, you guys were mostly the name was Power Nickel. It was more of a nickel story. It wasn't a copper story really too much yet. Yeah,
it was a 4-letter word story, nickel. Yeah.
And we were early investors, and the stock broke out at our DC event that we share with Northern Miner and with Misha and Jessica 2 years ago. It really broke out there when Terry and I did a presentation just like this. It was like a massive amount of short interest in the stock, and it just got obliterated, and then the stock took off. So last question, I guess, would be just, anything you'd like to add about the critical minerals in general for the audience to get them to understand, how you fit into the overall portfolio?
Well, I'd like to build on your polymetallic point because you said the word. It's a bit of a trigger word. Terry's been really good with that.
Yeah.
It's not as sexy sometimes, and it's certainly difficult to work through equivalent language when you've got 10 critical minerals, as we do. I think you're similar.
Yeah, we're about 11. Yeah.
But the biggest and longest lasted mines in the world are polymetallic, full stop. Look at the top 10. They're at least copper, gold, porphyries. And then you've got Mahalaquena, which is one of our aspirational peers in South Africa. You guys are Norilsk, I think.
Yeah,
you're
Norilsk
calling.
is the granddaddy.
It's
yeah.
a polymetallic. And that's what John is saying about you've got an internal diversification hedge on commodities. You're not married to palladium, nickel, whatever. This is why Glencore likes what we're on to. Scale, polymetallic.
You're agnostic on commodity prices to a degree.
Yeah.
It really, gold can take a tumble.
Yep.
Who cares? You've got X, Y, and Z already in the portfolio, so it's going to work out for you.
I'll also just note that it's surprising to the U.S. government how many things we have. We've just recently engaged a conversation about chromium. They've heard our name already from nickel, cobalt, PGMs, rhodium. And now they're, that same name has 2.3 billion pounds of chromium, like polymetallic. Yeah. Sorry, Duncan, I cut you off.
Yeah, no, not at all. Listen, some of the earlier presentations brought up interesting aspects, and if you take a look at the big picture world, China has been incredibly aggressive and, shall we say, thoughtful in how they've put together their infrastructure to absolutely dominate a whole bunch of metals that are in incredible need. And you've not seen the infrastructure development, certainly in North America and Europe. You have events like AI showing up on the demand curve for electricity, and the infrastructure is not there. There's a comment from the general saying we haven't seen a oil refinery built since the 70s, and you're only just starting to see nuclear show up. So we have a real problem that needs to be addressed. It'll be very expensive to solve and needs a lot of political will. And we have the goodies that are part of the solution for all this stuff. So while we see a pretty strong demand curve right now, it's going to be substantially higher in short order. So that has us pretty excited about our path to profitability and making a lot of money in the stock. That's the bottom line.
Yeah, thanks, gentlemen. I think that's a good point to conclude with is that as investors, we look at stocks sometimes and we say, why isn't this thing doing better, right? Like I say this like to myself every week. And sometimes you have to step back and say, this company has so much stuff in the ground that people need that when you have a few drinks with people like Mike and I have, and you say, hey, what's the, like, really, if someone like said to you, hey, Mike, I want to buy this, I'm going to give you an insane number, like how quickly could that happen? And it's a matter of weeks a lot of times. It's not months or years. Like there's the option for both of these companies probably to sell themselves to someone for a 30% premium tomorrow. But they don't want to do that because they see the vision that Don and I have, which is hold what you have tight right now. Like this is a bull market, right? Like let's just get through the BS period that we're in right now and get to the finish line in a couple of years because these companies have so much promise. I mean, if you look at the copper hits that Duncan's team just had in May, it's insane. Like 4% copper is insane, and these guys are putting up double digits. It's just, this is very enviable in a copper market that's hitting all-time highs literally last week, and these companies, not just the two here, but many that I brought to the conference, are getting phone calls every single week of like, hey, we're going to give you some terrible deal. It's like, why would you take it? Like we all think in the room that silver's going back up above 100 again, right? If you're a silver company, why would you sell today? Right? Like gold's going back to 5,500 at some point in the next 12 months. Why would you sell as a gold company cheaply? It's like, so I always talk to CEOs, and Don does the same thing, probably even more aggressively, to say like, hey, you guys really need to have everything that you hold everything tight that you have, because the majors are going to be knocking on the door if they're not already. So Thank you, gentlemen. We really appreciate it. It's been a pleasure. Yeah.
Thank you, Ken.
Yeah. Thanks, Duncan. Of course. Thanks, Mike.
Character, apparently.
Yes. I just have one more thing to say, and then you guys are welcome to leave. So I just wanted to conclude the event by saying that I really appreciate everyone making the time. I realize that the flights getting here probably went up triple since we started talking about the event, and for taking the time out of your busy schedules to meet each other. You know, I hope it was interactive for all of you. You know, we talked about this 2 nights ago, but I really try to create events that are interactive between companies and investors. That's the name of the game for me. It's not about, you noticed on my sponsorship list, it's a very short list, and a lot of those people didn't pay me $1. I turned away 6 figures of money from sponsors that wanted to sponsor us. I'm not going to have bankers here selling you stuff, or analysts talking to you about a deal. Like, we wanted to bring people together. That's the whole concept. So I hope I was successful in doing that. And I wanted to thank my staff, Jen and Einar, who were here with me, and my daughter. She chipped in. We'll be heading to Florida to kind of do this whole thing again later this week. So there'll be another set of presentations on Friday the 22nd. We have a lot of the same type of companies that are going to be presenting. So my final suggestion to investors is get back to your computer and put some bids out there. Like this, there's no perfect entry point. You know, I've said this over and over again. We never get the entry point correct. It's through diligence and resilience that you build wealth in this sector. You have to continue to buy and have conviction and check yourself. And if you're a company, I think that you have to get your message out there. and that message has to be through conferences like this, but also through webinars, through press releases, through more press releases, that is, through CEO messages, whatever that is. You have to have a team meeting about this summer when it's a little slower and just say, hey, how do we kill the second half, right? How do we change ourselves and challenge ourselves a little bit more to be different? Because investors, you can see from this room and from the last couple of days, they want to put money with you. But we need sometimes a reason to put money when things are this bad in the press, right? The press is killing sentiment right now. I mean, it's a temporary phenomenon, everyone. This is going to be done, and it's going to be done this year. And so at some point, we're going to see some real moves up, and it may not be like a ringing of the bell. We don't always get that as a community, right? We don't see a clear, like you saw that in the price action up until last week when China and the U.S. met, and it was not a real win, right? On Friday, the price action on the 15th was awful. But previous to that, those 4 days, as well as the previous week, we saw a nice uptick in our sector with the assumption that we were getting close to the finish line on this war. We are going to see that finish line this year, I believe, and we are going to see things move a lot higher for a lot of the companies that attended. And I hope you as investors will take advantage of that. So we really appreciate it, and thank you so much.